Imagine that everything you know about money, prices, and wages changes overnight. You wake up, go to the market, and realize that the bread that used to cost $3 now costs $30. Your rent, which was already expensive, has tripled. Your salary? It stays the same. Sounds absurd? Well, this is the reality in countries that have seen their currency collapse. The problem is that there are now worrying signs that the US dollar might be under pressure like never before. And here's the uncomfortable truth. While most people ignore this possibility, billionaires, banks, and even governments are already taking steps to protect themselves. They know that when a currency loses its value, those who are unprepared pay the highest price. But the good news is that you still have time to act. In this video, we will reveal exactly what is happening with the dollar, how it could affect your life, and most importantly, what history teaches us about moments like this. Stay with me until the end, because the information you're about to learn could make the difference between keeping your wealth safe or watching your money evaporate without being able to do anything about it. The belief that the US dollar is unshakable is a trap that many fall into without realizing it. For decades, the US has enjoyed a privileged position, with the dollar serving as the world's primary reserve currency. This has allowed the country to print money without immediately suffering the consequences that other economies would face. But this power is not eternal. History is full of economic empires that collapsed because they believed their currency would never be questioned. The British pound, which once dominated global trade, lost its position to the dollar after World War II. Now, some economists warn that the dollar might be on a path of relative weakening, even if a total collapse remains unlikely. The first major warning comes from the U.S. national debt, which has surpassed $34 trillion. To put this into perspective, that amount is almost equal to the entire wealth produced by the country in a year. The problem is that this debt keeps growing uncontrollably. When a country spends more than it collects, it needs to borrow money, which happens through the issuance of treasury bonds. But here's the danger. Investors and foreign governments need to believe that these bonds are safe. If confidence in the dollar starts to crumble, demand for these bonds could plummet, forcing the U.S. to pay increasingly higher interest rates to attract buyers. And when that happens, the government needs to print more money, further accelerating the currency's devaluation. But it's not just the debt that threatens the dollar. Excessive money printing is also eroding its value. In recent years, the U.S. has pumped trillions into the economy to combat crises, from the 2008 recession to the 2020 pandemic. In the short term, this helped prevent market collapse and ensured that people had money to spend. But what was the cost of this? Persistent inflation. The more dollars circulate, the less valuable they become. Imagine you have a strong cup of coffee and decide to add more water. At first, it still retains some of its original flavor, but as you continue diluting it, the taste disappears. The same happens with the dollar. The more it is printed, the less purchasing power it has. What once bought a full meal now barely covers a cup of coffee. One often overlooked but crucial factor is the dollar's status as the global reserve currency. For decades, countries around the world have relied on the dollar for international transactions, particularly for buying oil and other commodities. But this dominance is being challenged. Countries like China, Russia, and Saudi Arabia are making deals to conduct transactions in other currencies, reducing their dependence on the dollar. According to the International Monetary Fund, the dollar's share of global reserves has fallen from over 70% in the 2000s to less than 60% today. This means that, little by little, demand for dollars may decrease. And what happens when a product becomes less desirable? Its value drops. This doesn't mean the dollar will become irrelevant, but it could lose part of its global power. Another factor that adds even more risk to the dollar is increasing geopolitical instability. For a long time, the U.S. dictated the rules of the global economic game, but this dominance is being challenged. China is expanding its economic influence with projects like the Belt and Road Initiative, creating direct trade links without the need for the dollar. Additionally, countries that historically depended on the U.S. financial system are seeking alternatives. The BRICS group, Brazil, Russia, India, China, and South Africa, is developing mechanisms to trade among themselves without using the dollar, and there are even discussions about creating their own currency. Although these initiatives are still in their early stages, they indicate a long-term trend that could impact the dollar's dominant position. Given this scenario, protecting your wealth becomes essential. Diversifying investments is one of the most effective strategies. Assets like gold, historically used as a store of value in times of crisis, and cryptocurrencies, which offer decentralization and protection against unstable monetary policies, can help reduce the risks of exposure to dollar depreciation. Real estate in stable markets like Europe and Canada also provides protection against currency volatility. Additionally, investing in stocks of multinational companies that operate in multiple currencies can mitigate the impact of a declining dollar. Another strategy is to hold part of your wealth in strong currencies, such as the Swiss franc or the Canadian dollar, known for their stability and lower vulnerability to inflationary shocks. Beyond these alternatives, hedge funds and inflation-linked bonds offer protection against currency fluctuations. Large investors are also adopting asset allocation strategies in commodities like silver, oil, and rare metals, which tend to maintain their value during periods of monetary instability. Furthermore, increasing financial market knowledge and seeking professional advice are essential steps to ensure a well-structured and crisis-resistant portfolio. If the dollar's devaluation continues, the impact won't just be felt in financial markets. The cost of living could skyrocket, making it increasingly difficult for American families to maintain their standard of living. Housing prices, food costs, and fuel expenses could reach unsustainable levels. Additionally, companies that rely on imports may see their costs rise exponentially, passing those increases on to consumers. What once seemed like a distant problem for economists and investors could become a harsh reality for anyone simply trying to pay their bills at the end of the month. Now you know that the dollar isn't as indestructible as many believe. The warning signs are everywhere: an out-of-control national debt, declining global confidence, and even major investors protecting themselves against a potential collapse. The question is, will you ignore these signs, or will you act now while there's still time? Think about it. If billionaires and governments are already taking measures, should you really be betting everything on the dollar? What are you doing today to protect your money and ensure your wealth doesn't dissolve in the face of inflation and instability? If you haven't started yet, now is the time. Diversify your assets, explore alternatives, and learn more about what truly keeps your wealth secure. Because one thing is certain, those who prepare stay ahead, while the unprepared pay the price. And if you want to continue learning the best strategies to protect your money and build a solid financial future, make sure to subscribe to the channel and turn on notifications. That way, you won't miss any essential content like this. Now tell me in the comments, do you believe the dollar will remain the world's dominant currency in the coming years? Let's discuss.